Today we're going to tackle the topic of an insurance claim. Probably one of the most complicated and complex things that we deal with as a management company, and certainly that the board might not fully understand, and certainly the affected homeowner is going to want to know the process involved. Multiple phases, multiple steps that happen with an insurance claim. So today we're going to use an example, a scenario of a water loss in a condo building, one of the most common types of insurance claims that we deal with. So the first thing that's going to happen is usually the homeowner is going to call the management company and report the problem. And we won't get into it today, but the first step obviously is the manager stopping the source of the leak so that no further damages occur. And the next step is kind of ascertaining what's the scope of the damages to this claim, and do we need to get a water mitigation team involved to dry things down and start tearing things out. Well, we're not going to get into that step today. We're going to assume that yes, there's an insurance claim in process, so we need to file a claim. There's enough damages. The first thing that the manager is going to do is typically going to say, yeah, I should probably come and review this after talking to the homeowner. So the manager is going to come out and meet with the homeowner. They're going to review the damages for themselves, really look carefully, thoroughly document, taking a lot of pictures and really understanding the source and the scope of this claim involved. And the manager's typically going to say, yep, in this case today, definitely is going to exceed the deductible of the association, which let's say is $10,000 in this scenario. So I'm going to go file a claim. Manager's going to go back to the office. They're going to file a claim with the insurance carrier of the master policy of the association. We're going to use the scenario today of $10,000 deductible, and let's say it's about $30,000 of a loss. The first thing that's going to happen is the adjuster is going to come out and do the same thing that the manager did. They're going to meet with the homeowner, review the area, thoroughly document all things involved, thoroughly inventory all of the components that are a part of the damages of this claim. And they're going to generate what's called a loss scope. And that loss scope is very detailed, and it's going to itemize out all damaged things, the size of those things, the feet involved with those things, the materials. It's going to thoroughly document all those things and create a report. And that report then assigns the value of the claim. So in this case, we're going to say it's a $30,000 worth of damages. So that loss scope is going to show $30,000 minus a $10,000 deductible. That scope, that loss scope, is going to be provided to the manager so that the manager can understand it. And the next step involved then is the manager hiring a contractor that's going to then come out and do the same thing that the adjuster and the manager did. They're going to come and they're going to thoroughly review the damages that the adjuster assigned on the loss scope. What was all damaged? Are there more things that should be a part of this? Are there things that were missed? And then they can then sign off and say, yes, I can do this work for $30,000. So now that we're all in agreement of the scope of the claim, how much of the claim, now we can proceed the work. And the contractor will then get to work on the repairs. Simultaneously now, what's happening on the back end is that the manager and the management company is working very, very hard on the financial component, the financial management of the insurance claim, which is where things get really tricky. Funds and proceeds of an insurance claim come in three waves. The first is deciding how the association is going to handle the deductible. In this scenario, it was $10,000 was the master policy's deductible. So typically, this association, only one homeowner was affected. So the association might assign that $10,000 and assess that to this homeowner that's benefiting from the claim, that's having all the repair work done. That homeowner is then going to take that $10,000 loss letter, or assessment letter, and give it to their HO6 policy under their loss assessment coverage as a part of their insurance. And then their insurance company then sends the association, the management company, a check for the $10,000. So now we've collected one of three phases of money. The next phase of money are the proceeds that come from the insurance carrier. And it comes in two different waves. It gives an actual cash value. And for scenario's sake today, let's say they give it 50%. So they're going to give the association $10,000 of actual cash value. So now they've collected 20 of the $30,000 on the claim. The remaining $10,000 will be provided after all of the work is done. That's what's called the recoverable value or the depreciation value. And that is where things can get really tricky because that's where the number can change. So to date, we've collected the $10,000 assessment from the homeowner. We've collected the initial $10,000 from the carrier. But in the process of all of those repairs being done, the contractor might find additional damages that weren't a part of the scope. If that's the case, then they've got to work with the manager, and the manager then has to work with the adjuster to assign additional damages. Let's just say there's an additional $2,000 worth of damage. So now, at the very end of it, the contractor is going to submit their invoice for $32,000, and the association then will receive, the management company will receive that last and third check of $12,000. So they've collected all three phases of the proceeds for the claim. It can be reconciled and zeroed out on the association's books. The work is done, the homeowner is happy, things are restored, and the association's financials are all made whole. So as you can see, there's a lot that goes into an insurance claim, a lot that goes into the process, and a lot of things going on with the back end of managing the insurance claim. Hopefully you found this video helpful. Lots more on sharpermanagement.com, so check them out.